Welcome to the daily update, where I'll go over the action in the market for Friday, January 24th, and we'll see how things look for Monday, January 27th. Not a real strong day, but not a weak day either. So, the way I'm looking at it right now, at least to this point, we are still positive. If we can chop sideways while being overbought to try to work off some of these conditions, that's actually positive. What we'll be waiting to see is any sweep of selling that comes into the market that actually changes the climate back over to negative. We're still looking overbought in the short term, and we're getting some of those short term indications from some intermediate term indicators. So we want to respect that, pay attention to it, just realize that it's there. It doesn't necessarily mean there'll be a reversal, but it may mean that we see some sideways market action, at least for a while. Okay, let's go back and talk about what happened and then look at some charts. Right at the open, we had pretty much a flat open. We went up a little bit right after the open, and we just chopped above and below the unchanged level. There was really no conviction. Even at the open, we didn't see the usual gyration that we often get. Then as the day went on, we declined down below the daily pivot at 6104. We actually broke below 6100 at S1 at 6089. And then we just drifted. We stayed above S1, so we didn't break that level of support, and we closed slightly below the daily pivot. So, yeah, it was a down day, but under the surface, it's still looking pretty positive for the time being. We were down 0.29% on below average volume. That's another thing that's kind of encouraging. Now, we did go up on Thursday on below average volume, but there was not a lot of price movement. And Friday, we went down a little bit on below average volume with not much price movement either. We are still positive in the short, intermediate, and long term. Interest rates actually came down a little bit, and the dollar came down a bit too. That helped give a little bit of support to stocks from possibly going down even more. A lot of the talk right now is what's happening with the new administration, but there are also all these geopolitical things going on. But the market's not really paying attention to that for right now. It hasn't been. Okay, then some comments. Meta, or we also know it as Facebook, they announced a 60 to 65 billion dollar capex or capital expenditure plan for 2025 that will focus on its AI growth initiatives. The stock didn't change all that much, but AI has been the rage now with the new administration announcing these bills, even though they're not quite sure how all this is going to work out. The $500 billion plan there, and we'll have to see how that's going to all unfold. But now we're seeing lots of money going into this area. Small caps and the bank ETF, these are not major areas as they apply to the S&P 500, but they are important. And we want the financial sector to do well, and part of the financial sector are the banks. And small caps, they're supposed to be just really going up strong right now. Both of those are still below their 50-day simple moving averages. So that would turn things more positive with both of these areas of the market if we could get above that, and that might help the S&P to continue to go up. Until we get above them, this might act as a limiting factor as well for the S&P to go up. On a short-term basis, we're still looking pretty long, but a few things have dropped off. We have the usual indicators that are there whenever we're trending one way or the other. The Stochc RSI, Williams percent R, CCI 14 and 20, the stochastics. What we're a little bit more concerned about is the McClellan oscillator for the S&P. A little bit concerned about the boom indicator. We're still far away from the 20 period moving average, even with the decline that we saw, and the RSI short term based on 9 periods. In the intermediate term, I actually added this to the list, but it's been on our minds for a few days now. The advanced decline, that's where I take the advancers and subtract the decliners and then do a 10-day moving average of that. That's giving us a really extreme reading, which is positive, but maybe a little too positive. The CMB composite is still extreme. The PMO studies, we're actually seeing the buy signals starting to get extreme now. And the Sean trend meter continues to be a little extreme. And the no real change to the scenario. Now, the Fed's going to come out this upcoming week. They're going to meet on Wednesday. They're going to have their announcement. They'll have their little report that they come out. with their projections that the market has now become fixated on. And then Jerome Powell will have the press conference. And so there's a lot of Fed things that will happen this upcoming week. We'll see if this changes the overall scenario. The scenario that I have right here is pretty much from the last meeting 6 weeks ago. The dollar was down and interest rates were also down, not very much. We just were down one tick to 4.63% with the 10-year yield where we had been at 4.64% after Thursday. Sentiment is still improving though, even with the down day. We're neutral, but we're getting back up to that 50 level. We're just shy at 49 where we had been at 47. And the overall momentum of sentiment has been improving, and we're not looking extreme right now. So this is actually more positive. And we're still not trending. The ADX is below its moving average and it's below 20, but we are positive since the green line is on top. Because of the slight down day, I have our bias at mixed because there were some positive things under the surface, and we're not seeing things really shift over negative. We just kind of drifted lower, but I'm still keeping our momentum over the last number of days at positive. So we did get the S&P Global US Manufacturing. I don't have a chart for this one. The takeaway is it's above 50. And we haven't seen that in a while. It's been below 50. When we're at 50 or above, that shows expansion. When we're below 50, that shows contraction. Where last time we were at 49.4. Then we also got the services. Now, this was a little bit of a disappointment because it's been stronger at 56.8. Well, it came in at 52.8 this time. So it actually declined, but it's still above 50, but it slowed down in what it was showing as far as growth. And consumer sentiment came in a little pessimistic in the latest reading, 71.1. They expected it to come in at 73. Last time it was at 73.2. If we go back a year ago, we were at 79. So there have been some difficult things that folks have had to deal with on the inflation front and interest rate front and just how they're feeling about things. Existing home sales, they didn't have a chart for this one for some reason. They were up 2.2% month over month. This SAAR, that's annual. This is 4.24 million, a little bit more than the 4.21 million they had expected. And last time it came in at an annual reading of 4.15 million. So we are seeing an increase there. And sales were up 9.3% if you take it over a year ago, and then you use this on a year over year calculation, that's 4.06 million. All right, here's the chart of consumer sentiment. This is the one that I find, and then I have an additional chart that I also plot this on. This breaks it out a little bit more, where we have the blue line, which is the total reading. That's the number that the headline number. And then expectations, that's looking out into the future, and then how folks are feeling right now. A little bit pessimistic in the latest reading. And this is the chart that I plot here, and I put the 2-year treasury yield on here as well. We're seeing interest rates kind of going sideways with the 2-year yield, where we decline just a little bit with sentiment. But overall, it has been improving. We go back to 2022 when we were seeing a really low reading for sentiment. That was a bad year economically. The stock market was struggling. We were just coming out of the lockdowns, and the economy was really in some difficult times. We've been improving overall since then. So that's kind of the takeaway from this. Then looking at the small business confidence index, and if I remember right, I listened to President Trump when he addressed the World Economic Forum. He brought up this report. He said that small business optimism just shot right up, and this has been since the election, where folks are feeling a lot more optimistic at the small business level. And this is a big deal because most people work for small businesses. So to have this really shoot up is confident. All right, make that one new high for 2025. And we set that after Thursday. We set an all-time high for the S&P. And then the aggregate financial assets and how they're being allocated across households, mutual funds, pension funds, and foreign investors. The stock market is still the place to be. Now, debt, this means bonds, where it's actually coming down, but still that's 18% overall. And we still have a lot of money in money markets, 13%. But most people are sticking their money in the stock market. And if it continues to go up, that will stay healthy. If we really shift and the stock market really starts to come down, we'll see this line coming down too. You can see back in 2022, we saw a lot of money coming out of the stock market because we were in a cyclical bear market at that time. Okay. Then the earnings and gross buybacks here. Here's the earnings seasonally adjusted, and Deutsche Bank still has that going up, and that justifies prices going up. And then buybacks. These are companies that come in and buy back their own shares. That's seen as a positive thing. That is also increasing right now. And then country composition according to the MSCI World Index here. And the US. That's why we do one study later on in the video where we exclude US stocks to see how they compare to the rest of the stocks in the world. Because even when you take the whole world together, the US is still the majority of that calculation. Then our S&P 500 volatility regime. Okay, I'm not sure really what this is. The takeaway is, though, it points to very low probability of a low volatility regime. Okay, I'm not sure what that means. Basically, this could end up being positive. Probability of different S&P 500 volatility regimes, and then it's going down. So volatility usually picks up when the market's under pressure. When we're going up, volatility trails off. So that's what I would take away from this. But this is just probabilities in somebody's own model. Growth projections. If you look at the global economy, we're looking to be up 3.2% when we start calculating 2024. And we look at going up a little bit here in 2025 into 2026. The advanced economies, this includes US and Europe, and then emerging markets and developing economies over here, where they do see more growth here. And that's why a lot of folks find those markets attractive because they are more growth oriented. But lately, it's been the US markets and the developed markets that have been doing better. Then this I actually showed in yesterday's video, but it was in a different place, showing the forward earnings ratios. And I'll be showing this again in the intermarket analysis video when I go over the earnings. This is a PE ratio of 21. When we get above 20, we're considered to be expensive. India is even more than that, and then it's even more when you take in the earnings weights of the S&P 500 with India. That's kind of expensive right now. And then you can just see across the board, the other markets around the world tend to be cheaper. China's been into some difficult times now with their stock market and with economic things happening there, and that's why we're seeing the PE ratio really coming down right now. Okay, and we hit 6,100 with the S&P 500. We actually dropped a little bit below that in Friday's session. I didn't really spend any time on Twitter. This is the intraday chart, and going back a week ago, most of the gains that we've been seeing actually came from the gap. And then we haven't really been seeing a lot of action. We gap up, and we did see some action last Tuesday, but we gap up and then just kind of drift. And then we came down a little bit and then saw a little bit of strength on Thursday here. And then we tried to move up here on Friday and then ended up just drifting lower. So we're not seeing really big swings right now. Things seem to be holding together for the most part. Intraday, pretty much flat with the initial overnight session that carried over into the pre-market session. Tried to go a little bit higher during the cash session and then ended up drifting lower. Not much of a change as we close things down for the weekend. Still looking good here with the blue line above the red line intraday. This is growth still outperforming value. This is holding up fairly well too. Growth to value intraday for the S&P. And we really started to improve back in late November. And we started to go up then. We've been going sideways. What we're watching for is if we see a real decline in this ratio, that could be more negative for the market. And we were down more with growth with the large caps. Both value and growth were down. Also down with the mid caps where growth was down more. And we were also down with small cap growth where value was actually up. So looking at the ratios for the small caps coming down a little bit, but still looking pretty strong overall. Mid caps coming down a little bit, also still looking strong. S&P growth to value also coming down, but looking strong. So this hasn't really changed in its overall reading that we're getting here. And still a little bit concerned here. The growth to value ETFs that we do a ratio, we're back down into the rainbow. We would like this to go back up. Now, it's not falling apart, but it's not showing an awful lot of strength right now either. and pulled back a little bit with discretionary to staples after it had a good run. And discretionary is still doing quite well on a ratio basis with staples. That's more growth versus value or defensive versus offensive. Down a little bit with large cap growth, but still above the 50-day moving average. Still not trending, although we're flattening out with the ADX here, but we're slightly below 20. So that's not trending. We're below the moving average, so it's still weakening. But we're positive at the same time because the green line's on top, even though it was flat, although the red line continues to decline. And seeing that pretty much same thing in the short term. Trying to come back up, it's still below 20, still below the moving average. We also default to positive. So short and intermediate term, we are positive, but we're not trending right now. We were below average again on Friday as we were after Thursday. And coming back down just a little bit above the moving average here with the Ulcer Index. This is a fear gauge. And ticked down a little bit with the VIX. Even though we were down slightly, the VIX has been coming down, and that's positive for stocks. Also dropping further below the moving average with the bar chart. And the VIX of the VIX has been just chopping more or less sideways. It's right in between these two moving averages here. Not a lot of volatility right now. The momentum for the VIX continues to be down, which is positive. Still getting a very high reading for the skew index. Not sure if that's positive or negative. This is more anticipation. We ticked down just barely here with this fear gauge, and we ticked up just a little bit with this other fear gauge. So a little bit of a contradiction there. And this is strange, not this chart, but we ticked down a little bit with the equity put call ratio, but we just dropped off the face of the earth. There might be a problem with this calculation here. This is supposed to be a 5-day moving average of the equity put call ratio, and we didn't move that much to change the average. And we're still just ticking down a little bit with the 10-day. So I'll see if that chart ends up updating. Still pretty low as far as risk is concerned with the volatility risk premium. So not a lot of fears being projected there. Still looking positive with the advanced decline line based on price and volume. This is the advancers minus decliners in the 10-day. We're above this red line. That's why it's on the extreme list. Tick down just a little bit. We're waiting to see. Is this just going to mark some kind of sideways action for a while? We're waiting to see if there's more intraday selling that takes place that actually brings this down and turns things more negative. Still looking good here, even though we're contracting with the new highs. We're not seeing an expansion of the new lows. So our 5-day and 10-day moving averages continue to go up. Ticked up just a little bit, but we're still above zero with the short and intermediate term advanced decline ratio. Came down a little bit here with the accumulation distribution, but we're still above the red line. So this is still positive. We came down here with the histogram. The red line is flattening out, but we still treat this as positive unless we see more of a decline. And we ticked down a little bit with the Chaikin oscillator, but we're still above the moving average. So all three of our smart money indicators continue to be positive. We're positive with the vortex. The green line's going up and the red line's going down. And really didn't see much deterioration here. The cumulative advanced decline line based on price actually ticked up a little bit, ticked down just a little bit, but barely. It's really hard to see here based on volume. We're still improving longer term with the 10-day average of the highs and lows for the S&P. That is above 50 and continues to advance. We're still looking okay here when we compare the S&P, the bar chart with the red line. That's the NYSE advanced decline line. It was flat, and we were slightly down here with the S&P. And the cumulative advanced decline line, that's still looking pretty good. We actually ticked up a little bit with the regular NYSE advanced decline line and ticked back up a little bit here. The takeaway is that we're above the moving averages with both this and the previous advanced decline line that I showed. That's showing an improvement. We look at it based on common stock. We ticked up a little bit based on price, and we're actually breaking out a little bit, setting a new high here based on volume. That could be positive. Some buying on weakness. We're still looking good here with our advanced decline line studies. We're above the moving average with all of the indexes that we follow. Now, small caps are pretty much on the moving average, though. Then the stocks inside the S&P above their 20-period moving averages, we had gone above 80. That was an alarm for us. Not a real concern, just something that we want to take notice of here. We've dropped back and we're still going up. Even with the down day, we advanced a little bit here. So that's positive. We're still above 70, showing good shorter term momentum here. That hasn't been disrupted, at least yet. We declined, but still above 50 with the 50-day moving average. We were flat with the 100 and declined a little bit with the 200, but we're still well above 50. So these are still positive. Still above zero with our broad market measure of the moving averages of the highs minus the lows, the 5 period moving average there. So here's the daily chart coming off of just setting a new all-time high. The second day now, we have been below average with volume. Saw a little bit of sideways action with the 20 going up to sideways with the 50 and pretty much flat to slightly declining with the 200. Not a big change there. We're still looking extreme. We're kind of far away from the 20-period moving average. That's why we're getting an extreme reading here. Still looking positive when we look at the 50 and 200. Still extreme with the Stoke excuse me, the Stoke RSI, the Williams percent R, CCI 14 and 20. And these are the usual charts that we see when we're trending one way or the other. And they can stay extreme for a long time. We'll look at the short-term stochastic because we had a slight down day. That's rolling over a bit, but still looking positive. It hasn't really dropped that much. Rolling over a little bit, but positive in the intermediate term. We're still positive and starting to get extreme above this green line with our long short-term stochastic because this further subdivides the short-term time frame. Came down after being extreme with the force index, but still positive. The short-term trend is still looking good. We're above the lines and the lines are going up. Still above the simple and exponential moving averages based on 20 periods. That's positive. We came out of the +3 channel. We're back down into the +2 channel. So that worked off a little bit of this overbought condition. Balance of power ticked down a little bit, but we're still positive there. We're still extreme with the CMB composite. And we're actually turning positive now with the no-go-go. No-go. Go. Okay, let's try that again. Go, no-go. It had run some brown bars here. Well, when they turn to light blue like this, that is more positive. And we're still coming off of the highest high value here. So that's not really showing any weakness there. The TTM squeeze is still going up and is positive. We're still going up with the ease of movement above zero. That's positive. Because of the pretty fast move up here, the standard deviation is picking that up. And then we're positive again with the Erin indicator. And this is another thing we've been watching. The McClellan oscillator for the S&P, it's still extreme, but it's coming off of that extreme reading. And then when this is positive, that feeds into the summation index based on price and volume. Those continue to go up. So that's positive there. We were, for one day, we were extreme with the NYSE McClellan oscillator. We're working off of that a little bit now, but we're still above zero. So the summation index based on price and volume are positive. This is a warning sign here. We're coming down with the Swenlin trading oscillator based on price and volume. We just want to be aware of that. Sometimes this chart gives us an early warning. But momentum, we're positive. The PMO going up, we're going up based on price and volume. We're still extreme with the PMOs that are rising. We're above this green line. We're starting to get extreme with the buy signals, but that's also positive. And we're still positive here with the PMOs that are above zero. We're positive with the Elder's Impulse System for the S&P. We're positive with the Parabolic SAR. We're positive with the short-term slope oscillator. The MACD is positive. All of our momentum oscillators are positive in the short, intermediate, and long term. We are positive with the other momentum oscillator, the Copic curve. And we're getting extreme positive. We're getting into this sickly green area now with the Sean trend meter. So that's extreme positive. We're still positive with the money flow and the ultimate oscillator, even though it rolled over just a little bit. We're positive with on balance volume. And the Pring bottom fisher did give us a signal, and that turned out to be a pretty good signal. It actually crossed before we saw price going up, and that signal is still on for the time being. And we're coming down a little bit after being extreme with the RSI 9. I had it on our extreme list. I actually should have taken that off, but we're still above 50. That's the takeaway here, showing good momentum. The intermediate term trend, we're still above both lines, and the lines are starting to go up. And we're above all the plotted moving averages here. So that is positive as well. Even with the slight down day, the BPI still went up for the S&P. It went up for the NYSE as well. And it ticked back up a little bit for the NASDAQ 100. So these are good under the surface signs that we're still seeing. even though we were down slightly with the S&P. We're improving here. We're above the cloud, the Ichimoku cloud with price. The blue line is starting to cross back above the red line, and the green line ticked down a little bit, but it has been advancing. This is also a concern longer term. We're coming up and hitting this trend channel, the upper line here. That caused a little bit of problem for us in December, and we started to drop down from that. Is it going to cause a problem again this time? We're still positive though when we look at the trend for the hike in ASHI. We're positive with the Kegi chart, positive with the Renko chart, and positive with the thriller and break chart. So no real changes there. Tick down just a little bit with our 150 and 200 moving average studies, but they're still above these blue lines here, so they are still positive. We switched to negative with the small caps in the intermediate term, but we're still positive in the long term. We'd like to get above that 50-day moving average. We're still negative with bonds across the board on all time frames, and the dollar's been seeing some weakness, switching over to short-term negative. And kind of down the middle as far as the different sectors, we want tech, discretionary, and communication, which was up. We want those. Those are the growth areas. And we want financials to do well. Well, discretionary and tech, they ended up being down, with tech being down the most, but not enough to really change things positive. We did set an intraday high right after the open when we went up just a tick above Thursday. And the NASDAQ, at first it went above 20,100, then it dropped below 20,000. The euro's been kind of bouncing back up as the dollar's been going down. And the NASDAQ, first it crossed below 20,000, then it went below 19,900. And not really seeing much of an improvement or deterioration here when we compare the S&P with the equal weight version. Came down a little bit, but still above this pivot point, this R1 level above the 50-day moving average with the Dow. It had a strong day on Thursday. It was the best performing index. Didn't see much follow through on Friday, but we're still positive with the diamonds when looking at the Elder's Impulse system. We're dropping down a little bit below this R1 pivot point here with the NASDAQ, also slightly below the pivot point with the NASDAQ 100, since we did see a bit of a pullback with both of those indexes. But we're still positive with the Elder's Impulse system for the QQQs. Momentum for the NASDAQ 100 is still positive. This is the 50-day moving average for the small cap index. I look at two indexes. This is the first one. It would really help things if we could get above the 50-day moving average. Then we look at the Russell 2000 small caps, also below their 50-day moving average. And that right now is providing overhead resistance. And we've gone from positive to neutral with the small caps, with the Elder's Impulse system. Mid caps having a difficult time getting above this R1 pivot point. That's acting as resistance. And we're still neutral with the mid caps with the Elder's Impulse system. Declined a little bit, but coming off of really high readings here with the Wilshire 5000 and the total US stock ETF. So bit of a pullback, but not switching over to negative. This is the other one that I've been watching. We're right at the 50-day moving average here with the bank ETF. It would be more positive if we could get above that and close above it. Financial sector is looking strong though, and we like that. The FANG index also down a little bit here, but just setting a new all-time high, and it set a new intraday all-time high on Friday by setting a closing high, I believe, on Thursday. And we're starting to be a little concerned about this. We're coming back up to this shorter-term trend line that may be acting as overhead resistance. Apple ended up being down, still above its 200-day moving average. Microsoft was down as well, still holding up though. Google was up over 1%. Amazon was down 0.25%, just coming off of an all-time high. Nvidia was down over 3%, but still above its 50-day moving average. Tesla was down 1.41%, also still above its 50-day moving average. Meta, with that announcement, they saw some strength there, setting another new all-time high. Netflix was down 0.75%, just coming off of an all-time high. Comparing US to world stocks, still seeing the correlation strengthen in the short term and still strengthening with the longer term correlation. Oil was actually up a little bit, but little changed. We're getting more into the lower 70s now. The dollar has been coming down. We're coming back down to the 50-day moving average. Will this provide some support and we'll bounce up off of that? If we continue to fall below it, that could turn things a little bit more negative for the dollar, which might be more positive for stocks. And we ticked down a little bit with the 10-year yield. We ticked up a little bit with the 10-year based on price. We're still watching this. This is a concern. Home construction to 3 to 7 year bonds turned back down just a little bit here. We're watching this 250-day moving average to see if it acts as overhead resistance, where before it had acted as support. We're keeping an eye on the 10-year yield in Japan. That's what caused all the problems last summer. If this really starts to go up, that could cause problems again that could bleed over into the US markets. And coming down a little bit below the moving average when we look at the Qs to S&P, below the moving average with discretionary to S&P, and coming up to the moving average when we compare large cap growth to large cap value. So we're pretty much on the moving average with the large caps, still looking good with the mid caps, turning down, but still above the moving average with the small caps. So what's our log for Monday? We are dealing with earnings season now. In the upcoming week, Apple, Microsoft, Meta, Amazon, Tesla, companies you probably have heard of, they're going to be reporting earnings, and those can be very influential with how the market behaves. And then the FOMC meeting will be on Wednesday. They'll make their announcement at 2 p.m. Eastern time. We are still positive, but looking overbought in the short term for the time being. We haven't worked off that, but we're holding up though at the same time. We're going to get new home sales in Monday's session and then all the geopolitical things, with pretty much all the focus now being on the executive orders and the changes of the new administration. But anything else can come creeping up. There's still a war going on between Russia and Ukraine. There's still things going on in Israel and between Israel and Iran and Hamas and Hezbollah. There's still fires going on in California. There's still hurricane damage in North Carolina. I mean, all kinds of things that the market could worry about, but they're not really paying attention to that right now. Here's the economic calendar for the upcoming week. We're going to get durable goods on Tuesday. Then the Fed's going to make their announcement on Wednesday. We're going to get GDP and initial and continuing claims on Thursday. And then this is going to be the big inflation report. We're going to get the core PCE in Friday's session. We'll also get the employment cost index. And here's a look at the upcoming week. Seasonality, not really much of an edge either way. We're neutral to positive for Monday's session. And a little bit of positive seasonality here when we look at the post-election, according to the Stock Traders Almanac. This is also from the Stock Traders Almanac. This is comparing all the different years with each other, depending on what scenario is playing out, and then how can we compare that to what's been happening. And we're still finishing up the second half of January, which tends to perform well before we get set to go into February. Small cap should be doing better than what they've been doing, at least historically. This is a really good time for them. We'll see if they're able to catch fire. And then we're in the positive time from now until the end of the month, which will be Friday, according to Tom Bowley's research. So we're just worried about the Swenlin trading oscillator as well. That's the big warning sign that we're seeing for the time being. We're still looking pretty positive, though. Our smart money indicators, they pulled back, but they're still positive overall. Growth to value is still holding up. Discretionary to staples is still looking pretty good. Our advanced decline lines are improving. The S&P is still extreme positive when we look at the McClellan oscillator, but it's still positive with the NYSE, and that makes our summation indexes positive. We're still positive with the momentum, the parabolic SAR, the bullish percent indexes. On a down date, to have those go up, that's pretty good. And the vortex is positive. Our moving average studies are positive. The ease of movement, the money flow, and the ultimate oscillator, these are secondary indicators that I use. They are still positive. The financial sector is positive, and the momentum for the NASDAQ 100 is positive. So our conclusion, we're still positive. We're still dealing with an overbought condition, and it looks right now like the decline is just a little bit of a pullback. We'll wait and see on Monday if things develop as far as the intensity of any selling, but in Friday's session, it really didn't happen. In the short term, we're positive, but overbought, and that's where we're pulling back right now. We're still above the 20 period moving average. We're still positive and still looking at somewhat of a long list with being overbought now. And some of these overbought indicators are what's kind of giving us a little bit of concern in the short term. And we are still positive in the long term. Thank you. I hope you have a great weekend, and I will talk to you in the next video.